Stock market update, everyone. It's the one you've been waiting for. Everything's still expensive except energy. This is price earnings ratios, share price relative to their profitability. Green means good or cheap, undervalued. The share price is low compared to the profits, whereas red means the share price is very high compared to the profits. And it's only one measure of what might lead to prices moving higher. The other factors include obviously things as other measures of valuation, revenue growth, cash return on capital invested, momentum, Sortino, alpha, price earnings growth, and a host of other things. So I will look at all of these as we go through and give you some of the summaries. Now, in terms of performance, only energy has risen in the past week, were semiconductors as well. They're the two major ones. Internet content to some extent, but that's it. You pretty much had it, though United Healthcare has been an outlier, has been rising a fair bit. Let's just have a look at some of these bellwethers. Before we do that, price earnings growth ratios, they measure the share price compared to growth in profits. And again, what's cheap? Insurance like Berkshire Hathaway and the banks are cheap, but not much else. Arguably Amazon as well. How are we doing for performance so far this year? The NASDAQ is up 34%. It was up 44% at one stage, which meant my great investments program clients, some of them who were very NASDAQ heavy and cherry picked off that approved filtered list that I produced for them, generated 100% return year to date. Since that pullback in July, we've had to be a lot more picky with stocks. Where are we on the S&P 500? It's in a downward trending channel. And so life is a little bit difficult where you're picking individual stocks. And for that reason, and given that in this bottom half of the graph, the MACD monthly and weekly, because that's what we've drawn there, the monthly and the weekly is lower, the monthly is still sideways, which is good. If it drops below, if the monthly as it did there drops below its own moving average, which is the yellow dotted line, that is very negative, as you have seen here. Okay, we're not quite there at the moment, but we're going to keep an eye on it. Not saying it will necessarily get there. I suspect in October we'll probably do this. And there's your October right there. It tends to be more positive. FTSE 100, well, that's the direction of travel, I think, still, I'm afraid. Apple, we've got a bit of a base. Now, here's what's interesting. This weekly MACD or momentum could continue falling. That is not yet beneath. It's more like this. Now, it doesn't mean it's guaranteed to fall. It might already have formed a base. We just don't know yet. It's not clear whether it's going to be like this, where you get the fall and then you rise, or whether it's going to be more like this, where actually it could just go sideways for ages. I suspect sideways for ages. Would I buy more at the moment? No, if you put a gun to my head, I would, but I'd rather dollar cost average in over, say, 3 months. Would I sell? No. Would I hold? Yes. Okay, that's what the analysts think is the upside if they reach the average price they predict from its current price. Alphabet. That's the direction of travel for Alphabet. And it is sort of sideways at the moment. October, 75% to the upside is the probability of moves. 75% of the time, it's to the upside. And so again, would I buy more? Probably not at the moment, or I'd dollar cost average in. If you put a gun to my head, would I hold? Yes. Would I sell? No. All right, whoops, and that's what the analysts think. Microsoft, same answer as the others on buy, sell, hold. And yes, it's dipping, but that's sideways still. So again, the fear is it's something like this, where it's dipping. Now, the first warning sign is when the MACD, the monthly, moves downwards. The second warning sign is when it crosses below its own moving average. If the second thing happens, then it's very bearish. But if you start selling only when the first thing happens, you might sell prematurely. So it's a trade-off, isn't it? All the banks think buy, and October is 62% likely to rise. So would I buy more? I'd rather dollar cost average in. If you put a gun to my head, would I hold? Yes. Would I sell? No. All right, 25% to the upside over there. Where are we on Amazon? If you're risk averse, you might sell some. But otherwise, my options with Amazon are the same as they were for Apple, Microsoft, and the other ones that I've already mentioned. So we are with this. That could fall lower it's still sideways over here. October should be a lot better. As I said, September rarely goes up, and indeed it didn't. So I was right. 34% to the upside if we go there. Don't forget to look at these broadcasts, weekly updates, also on YouTube and my Telegram channel, as well as on TikTok. So that's where we are with Disney, and on my LinkedIn. Now, Disney, certainly don't buy, but it's there because it's a bellwether and it's not a tech company in most regards. So it's just an informative education. Now, in the past, it has done 100%. Will it do it again? Well, I won't buy any more today, that's for sure. 33 to the upside is what they think. Nvidia, again, if you're risk averse, you might say, I'll sell 10% if it drops 10%, and so on. Otherwise, if you're risk loving, you'd hold. And if you're risk neutral, well, again, it's looking a bit expensive. You might say, look, I'll just wait till Alpesh's Wednesday and Friday broadcasts and see what to do then. But for the moment, I'm holding. That'd be a very sensible, prescient thing for you to do. 48% to the upside is what the current price to the average of what the analysts think would get you. Tesla, it's on an upward support slope there. That sideways, it could fall a bit more. We just got to be careful, and I'll do this in the updates, that it isn't like this where it's now decided to fall, but I don't think it is. Okay, so not too worried. Meta has fallen from that massive upward trend, and I did say as it was approaching the high, there's not much to the upside left, and you're more with downside risk. And now you do have this, and it looks very much like this pattern at the moment, but it's a bit early to tell because this is still sideways, and it could just drop and then rise. As long as the moving average is below the MACD, we're fine. So, or put another way, as long as the MACD is above that moving average, it's not too bearish. So that's where we are with that. Would I buy more? I'd rather dollar cost average in. Would I hold? Yes. Would I sell? No. All right, so that's where we are with that one. ServiceNow, continue to like. Well, similar story to the other, so I won't interpret these. You've learned how to do it now. I do these videos partly for education as well for you, so I do want you to learn and practice doing some of them yourself. And similar with Cisco as it was ServiceNow. Okay, and same buy, hold, sell analysis that I've already given you on that. If you haven't already, have a look at my campaign for $1 million, because it'll give you some explanation of why some people have managed to get 100% return on their pension so far this year, and what we've been doing absolutely good and right for them. Thank you all very much. Feel free to like, subscribe, comment. Okay, like, subscribe, comment. Thank you.